Pressure is the key word there. Just how much pressure is being sustained by not just the employees who are not getting paid, but also the companies out there who could see some real impact on their business?
Well, good morning, Dom. Yeah, you have this situation, but you also have an economy that is stuck in neutral right now. You've got the consumer confidence index, which is drifting down. It took another ratchet point down on the present situation, so people are worried about their jobs. You've got CEO confidence, which is stuck in neutral, 49 out of 100. So you've got everybody frozen in this situation. You've got the tariff situation hanging out there. People are waiting for trade deals to come into play. Now, we're not seeing layoffs. I mean, some here and there, but not mass layoffs. But we're also not seeing hiring. You know, the jobs report was supposed to come out this morning. We're not going to get those data now because the government is closed. But the private jobs reports are drifting downward as well. Our own job report at the Conference Board was supposed to be slightly positive. So what we're hearing is that people are banking skill sets. Unemployment shouldn't rise a lot, but because you have the situation where you have 10,000 baby boomers retiring every day, 300,000 a month. You've got a couple million immigrants that have been returned. Now you potentially have government layoffs. So you've got this push-pull situation on employment. That is pretty much stasis when you net it all out. So the issue is, how do we get back out of this situation? Because you've got unemployment drifting, employment drifting, inflation's rising, and the GDP is coming down. That is the worst of all worlds. It's called stagflation, and that's kind of where we're headed here. We need a reset. We need these trade deals to get done, and we need to get out of neutral.
Steve, you mentioned a whole bunch of factors right now not moving in the right direction, not moving in a positive type trend. Yet, given all of those factors, the market, which is a forward-looking discounting mechanism, is still pricing in some good times ahead. How do you reconcile that, and how are C-suite executives across the world, and especially in this country, reconciling that? Everybody seems to think that things are going to be okay.
Yeah, the markets clearly are in nosebleed territory. I mean, it never seen anything like that. They're way overvalued. The question is, you know, what are the alternatives at this point in time? Executives are sitting in neutral. I mean, they are not happy. CEOs are not happy with where we're at. They have finality here on their tax situation, but they don't on their supply chain, the tariff situation. They don't know what their costs are going to be. They're holding back on investment. They're holding back on spending. They're holding back on hiring, which is going to hit the economy. So at some point, the market's going to either have to adjust to that, or what the market is betting on is there's going to be resolution on these tariff situation and everything will be fine. But there's a lot hanging out there right now.